What's going on, BiggerPockets? It's Matt Faircloth and this.
Hello.
Liz Faircloth. Say hi, everybody.
Hi, everyone.
She's back. She's back. It's Liz. Well, so we're going to be doing all kinds of cool stuff. We're going to be walking through this multifamily that we have here in Trenton, New Jersey. And I brought my wife today, and she's got her cool BiggerPockets t-shirt on,
Yes.
and we're going to talk about investing with your spouse. We're going to talk about doing multifamily deals. We're going to talk about all kinds of roles. We're going to talk about all kinds of cool stuff. You guys need to start firing off some questions, but I want you guys to do is, for those of you guys who are just now checking in, take a minute and please give me one of those shirts. They're already starting with the shirts.
I know.
Every time I do a Facebook Live, people want a shirt. Lee, I wish I could get you one of these shirts. I would. But you know how long it took me and Liz to get one of these shirts? I love BiggerPockets, but it took me and Liz like 2 years of working with DP to get these shirts. So I wish they would sell them. They would make a lot of money selling shirts. But unfortunately, I can't do it. So, hey, somebody just gave us a thumbs up. What I want you guys to do, for those of you guys that are watching, go ahead and give this thing a thumbs up right now. I want to see lots of thumbs up come across the screen, because what that does is that shows Facebook that people are watching, and what that does is it'll help propagate this video so lots and lots of people can check out this really cool thing that we're going to do today to talk to you guys about investing in multifamily. We're going to talk about investing with your spouse. We're going to talk
share it with your spouse. Share it with your boyfriend, your girlfriend, your partner.
That's a good idea. Yeah. Here's what I want you guys to do too. If you're married, or if you have a spouse, if you have boyfriend, girlfriend, what I guys want you to do is you can actually tag them in this video so they can check this out later. They can watch it later, and they can learn, and you guys can learn some good tactics that Liz and I have been investing together for 12 years. And can you believe it? I know, right?
Seems like longer sometimes.
Yeah, we've been doing this for 12 years together, so we can offer some insight to you guys that are looking to either get into the game or already are investing, that are married or dating or wherever it is you are investing with your life partner. We can talk to you guys about that. We hope to get into that with your Q&A. So, already with the questions, how do you feel on tips you can share about single-family house that you've been split into multifamily? We used to stay away from those properties. That's a good question, Jim. We've bought a few single families that have been subdivided. I tend to stay away from stuff like that because most of the time when they chop up a single family, like let's say you've got like this big 3,000 square foot mansion from back in the day, to have somebody come and cut it up and turn it into a bunch of apartments, they tend to do something wonky. Like it wasn't built as a multifamily. They're gonna have to do something weird. They have to take a stairwell and turn it into something funny, or they're going to have to take what was an upstairs bedroom and turn it into a kitchen, something funny, and it tends to come off funny. So we own properties like that, but they're not my favorite. So it's not that I'm saying don't do it, but just make sure that how they subdivide it is in a clean manner and it doesn't come off, weird, right? So again, tag your spouse or your significant other in this video. Thanks for the likes you guys have been giving us. And take a minute. Here's the thing. I don't know if you know this. I have a competition going on with my friend Brandon Turner. He's my friend, but she laughs. Guys are so funny with competition, right? So I have a competition going on with Brandon Turner, and the last video that Brandon did, that was on Facebook Live, he got 90 shares.
Wow.
Okay? I know. That's what I said. I said that too, but it can be beat. And so I want you guys to help me beat that. So please, take a minute and help me share this video. Just share it on your Facebook wall. Share it with somebody else in your life. You can share it with your spouse too. But share this video because it helps propagate the BiggerPockets message, which is one of the best sources for free real estate education in the entire universe. It does that, but it also gets the message out there. And here's another thing it does. Sharing videos like this takes people that if you're like a full-time investor and you want to make people more aware that you're a full-time investor, if you share videos on your Facebook wall, people will see, hey, look, that guy's involved in real estate. I want to be involved in real estate, but I don't have the time. I've got my full-time job as a lawyer, and I want to invest in real estate.
Softly introduce.
Yeah. So if I see what my buddy Jim Wilcox puts on his Facebook page, like, oh hey, that guy invests in real estate. I'd love to do that. Let me give him a call. So, Lee, we gotta give Ray a tour too. Would you think it would be feasible to add a duplex in a large lot that's already has a duplex, essentially 4 lots on one? So if you can do it as of rightly, meaning like if you don't have to go through zoning, if you can just do and go and build a duplex on the site, then yes, I would do that. But if you have to go through zoning and jump through a bunch of hoops, you may end up investing a bunch of money in engineering and legal and not getting your money back. It's my 2 cents. So So be careful. I'm going to give you guys a quick tour. Let's give it a tour.
It's awesome.
So this is a multifamily property here. We're up on the second floor. This is the fourth floor of a property, a multifamily that we renovated in Trenton. I'll go through the numbers with you guys if you remind me. So bedroom, and let's take them outside.
Rooftop?
Yeah, I got a roof. There's a rooftop deck on this place. You guys got to see. So check this out. So this is like, you know, the best spot ever. There you go.
Don't get locked out.
Yeah, let's not get locked out. Don't do that. Somebody watching this video have to send some help over to let us in, right? Here's the lockbox code. Come let us in off the roof. Here you go. Cool view of the city of Trenton. Skyline over here. There's downtown over that way. Crush one of the buildings with my hand. So this site right here we're renting it for a good bit above the market, but we're trying to create a luxury space in Trenton. We're offering this out for $1,750 a month for a 2-bedroom. The market in Trenton is somewhere between like $1,000 and say $1,350 a month, but we're trying to raise the game for what's possible in Trenton with regards to luxury housing. So I'll show you guys downstairs. And Liz is going to razz me about a few things downstairs because I did things one way. I'm not a detail guy, but Liz is. And then we'll talk about investing. When we talk about investing with your spouse and how your spouse can come in and aid the gentleman of the viewing audience out there. Anthony Palmito says, hi, Matt and Liz. Hi, Anthony.
Hey, Anthony.
How are you?
I like your name.
Is it Paisano? Yeah? Paisano Italiano? Yeah. People don't know you're Italian anymore with a last name like Faircloth. All right. Liz was Italian. But here's exposed brick. A lot of things that exist in other urban markets, but not as much in Trenton. Cool spiral ductwork right there. So.
And you have to remember with this particular property, we've been marketing it and as really like luxury and loft style because of the high ceilings you can see and the exposed ductwork. And I came over here recently and we did a walkthrough over here of the kitchen.
I'm getting thrown under the bus right now. Just let you guys, just so you know, this is what's about to happen right here. Just watch.
This is under
I'm going to turn it around. I'll turn the camera around and give them the tour.
Okay.
The camera's turned around so I can see you.
Everyone.
It's a Liz show now.
So
Yay.
this is under construction. Just bear with us. But I did a walkthrough with my husband, and actually I came here to do something completely different. And instead of what you see here, you know, there was, I don't even know what it was. It was a weird.
It was a vinyl white. It was a vinyl sheet.
It was awful.
And it was very practical because if they backsplashed or whatever.
It was very ugly.
That's
extremely ugly.
It's true. It was ugly.
It was
ugly. Yes.
And I said, what is that? And he goes, oh, isn't it great? It's functional and it works. I said, no, it's god awful ugly. And I would never want to rent this apartment. So I really said, you need a backsplash. It doesn't have to be crazy, but just a nice little backsplash. And so he listened to me after some convincing. And what were the other things I told you? Oh, the woodwork, I kind of forget now.
Yeah, the trim work.
There was a number of things. And I think that's one of the most important lessons in working with your spouse and working together is to really appreciate each other's differences. And that's not always easy to do. I mean, I came into this property when we did a walkthrough for a whole other reason, and I told him what I thought, and we had that conversation. But, you know, we often will respect each other's differences. We have common values. We have different ways of approaching those values. And I think that's really important. Cool. We butt heads, too.
You want to field a few questions?
Sure.
I got Hillary Case here. First of all, shout out to Hillary. Women in real estate, go, go,
awesome.
go. Cool. So Hillary wants to know, where do you find your multifamily deals?
Well, that's a good question.
That is a good question.
So I'm sure, I don't know about most of you out there, but you know, finding deals is a bit competitive right now, no question. And you have to have, number one, you have to have multiple sources. So if you're someone who's used to working with a wholesaler, you're going to have to expand beyond that, maybe going to auction sites. So number one, look at your sources. And if you have one source right now, not good. I don't even care what the source is. Even if it's somebody who gives you pocket deals, you should be looking at having 3 to 5 sources of multifamily right now. And we just bought, this year we bought a few properties from auction sites. We bought it from a website called Zome, XOME.com, less common as Hubzu, and we also bought one from Hubzu. and we have one going on right now under construction. So, we never did that before, but we, like most people, kind of felt this squeeze of finding good opportunities. So I would suggest that as long as you're educated and you know what you're getting into, of course. But that's number one, is multiple sources and network, and don't be afraid of auction sites, because we found 2 deals this year.
Cool. Jeff Winchester wants to know, how do you manage properties that are rented for a long time? Do you inspect them periodically, or you just leave them alone as long as they're paying their rent on time?
Ooh, that's a good one.
Yeah, I know.
That's a really good question.
Yeah.
Matt can jump in on this one too, but we often will buy 2 types of properties, right? And you're going to find that for most people. Property like this was dilapidated, so we are not inheriting tenants. We're going to, so it's all completely, brand new renovated property. That does happen. That's one kind of strategy. The other strategy is when we buy, we just bought a duplex through one of the auction sites. It was a duplex, or it is a duplex, and it's we're inheriting tenants. You have to remember and keep in mind in that situation, most of the time, people are selling for a reason. They're not selling because it's a hands-off, wonderful passive investment, and they don't have to put any money into it. That's not why they're selling. Because if they were, they wouldn't be selling. So there's some reason they're selling. And you have to kind of think that there's going to be somewhat of could be a situation, and may not be with the tenants. But biggest thing you have to do is you have to onboard those tenants into your policies, your processes, and your kind of way of doing business. And I think that's the biggest thing that happens with us, is that most people we buy properties from don't have any process. So it's an onboarding process that we go through with new tenants. And sometimes, we have to evict those folks, and other times we don't. But it is a mixed bag.
Cool. Great question. A few other questions in there. So, awesome. Good question.
Hey, thanks. I'm done?
No, that's it. You got to go home now.
Matt
That's
misses
it.
talking.
No.
Matt misses talking.
Well, no, I have to plug the webinar for tomorrow. I'm teaching a webinar on how to flip houses with other people's money. I don't know. I hope you guys get to see Liz again. There she is. I normally do these things by myself. Wanted to try bringing Liz on, but she's awesome. If you guys love Liz, give her a heart. Give her a heart. If you love Liz, if you like having Liz on your Facebook Live with Matt together, give a heart and watch. You're gonna get a lot of hearts right here. So what you guys want to do is you guys want to write the coupon code SEP22, SEP22. In the comment bar down below. And what that's going to do is it's going to give you guys a link to a webinar I'm going to be teaching Friday at noon East. Look at all those hearts you're getting.
It's awesome. Thank you.
That's all for you. Okay.
Oh, I like hearts.
So I'm teaching a webinar on Friday on how to flip houses with other people's money. How to flip houses with other people's whose money?
Other people's money.
Your money?
No.
Not my money. They're other people's money. And it's win-win. You're not taking advantage of people. You are creating win-win situations for the people that you know in your network that can step alongside you and invest. And these maybe are people that have full-time day jobs that love what they do and that want to get involved in real estate investing but don't have the what?
Money.
Time. They got money.
Time. Sorry.
Time. She loses. You lose the quiz. You lose the BiggerPockets quiz show. So what?
I am getting less sleep than you.
That's true. Yeah, we have 2 little kids at home. But what I'm going to be teaching you guys how to do is how to flip houses with other people's money to create win-win situations so that other people can win alongside you. They can make money. They can reach their financial goals by funding your real estate deals. And I can even show you how to do it where they're going to put 100% of the money up for the right deal, right? So SEP22, how to flip houses with other people's money. I'm going to be teaching that on Friday at noon Eastern Standard Time. Be there or be square. If you type in that code, here's what's going to happen. Facebook will send you a message that will allow you just follow the instructions, and then you can get the info for the webinar. It's a free webinar. How much money?
Free. Zero.
Free. How much? This much money.
I love that.
Ghosts. That's how much money. That's how awesome BiggerPockets is. BiggerPockets is going to be doing it right now, Hillary. That's awesome. SCP-22, guys. Type it in, and you'll get the information to register for the webinar. And I will see you guys there on Friday at noon. Let's talk some more investing with your spouse. If you guys didn't do it already, tag your life partner or your spouse or your wife or your husband or your boyfriend, your girlfriend, or whatever you got. Tag them in this video so that they can watch this as well and learn about the strategies that we've developed on investing with your life partner. We'd be happy to talk to you guys about partnership investing, all that stuff. So get and tag them in this.
I was just saying that the biggest thing that helps us continue on together is that we have shared goals.
Yes.
And we review them together.
Yes.
And we know why we're doing this. So
that's
really
the biggest thing.
That's the biggest thing. If you don't have that, nothing else matters.
Yeah, that's the biggest fact. I think just knowing what Liz and I both want out of life, what we want out of investing, like where we see ourselves going, and what we're both willing to do to get ourselves there. Like, I'll say that when Liz and I first got started, I quit my day job. I had a day job. I was working for a manufacturer, and Liz had a job as a consultant, right? Mm-hmm. So I quit my day job, and we lived off of Liz's income while I built the real estate business. There needs to be that level of alignment to where one spouse is willing to do something for the advancement of the business. We even delayed having kids, all that stuff, so that we could build a real estate empire, a real estate business to guarantee our financial future. Right?
That's right.
And that's the level of alignment that we think that. Nice backsplash.
Hey, thanks. It's much better than I have to send a picture to all of you.
Did you guys see that bus I just got thrown under right there? Kevin just threw me under the bus. Kevin, I don't know if you saw in the beginning, but this backsplash was originally something else that had to get ripped out that Liz didn't like, and she was like, "I got to pull that out and put it in a real backsplash." So we did because Liz said so, and so we did. Now it's beautiful, and you're right. So thank you, Kevin, for tossing me under the bus. It's okay. All right, Nat Geary, what is the biggest hurdle building out a luxury apartment in Trenton? What indicators are you using to justify rental? Yeah, that's a great question. So there is a large development of a guy doing he's doing 148 units, the HHG project. It's called the Roebling Loft Projects. They're doing 148 units of luxury. Now we're at there's $1,750 for this 2-bedroom. Their 2 bedrooms are, I'll give you, a little swanky, spiral staircase, big glass windows, converted industrial factory and everything like that. And they're at $2,000 a month. Okay, it's okay, Kevin. But they're at $2,000 a month, so they're actually a bit above. Now, what they're doing that we can't do is they're building that many units, so they're creating a whole complex of luxury, but that site is right around the corner from here. So what the best thing you can do in an area where there's Trenton or not is to find somebody doing luxury and do it around the corner from them and do it for about 10% less. So that you can kind of peel off some of their client base. Mm-hmm. They're going to have to put a lot of marketing into leasing those units out, and we're right in the same neighborhood. So what we're hoping to do is to create a neighborhood of some luxury housing alongside them to benefit them, to complement them, because them having just 148 units leased isn't going to help them. What's going to help them is having an area around them that feels a little luxury with some nice retail, everything like that. So.
I think the other thing, though, is to know your market.
Yes.
And we've been investing in Trenton for 12 years or so, or 10 years. It's been a long time. And we've studied the market, and that's certainly, I've studied it, he's studied it. Mm-hmm. We're in the community. And I think that's also part of it is when you're investing, you either need to have someone you know, or you've hired, or you're working with that knows the local market, or you yourself have to know the local market. That's really, really important, I think. Cool. We didn't start with luxury apartments in the city. That's a big difference.
No, don't start with luxury. Do not make luxury your first move in a marketplace. I don't think, anyway. Because luxury, I think, takes a little bit of a stretch. You've got to have the resources in place, and luxury is a stretch to create in a market where it doesn't exist.
Right.
We are more of like a level B, level C investor. We do more workforce housing. I find that to be our bread and butter. Luxury is a bit of a stretch for us, and it's just something that we thought would be a good benefit to the neighborhood that we're in. We're heavily invested in this neighborhood right around this building. Our office complex is right down the street. We're on another building down the street, so it made sense to do luxury to kind of create like a higher price point here. But by far, we're not doing this kind of luxury stuff everywhere because I think you can lose it if you do it in everywhere you do.
Yeah.
Got a ton of questions here. Diana wants to know if we can watch a recording on the exact rate from BiggerPockets. Just got back to her about that. Cool. September 22nd. Chris Tufala, what's up, man? Guy from GoBundance. Chris Tufala's watching this. Love you, buddy. Cool. Here we got. So here's what I want you guys to do. For those of you women that are out there watching this, I'd like for you to, I mean, Liz has a certain perspective. Not every real estate investor is a woman, but women have a certain journey in real estate investing. And I'd like to, if it's possible for women that are out there, to throw a few questions at her. Liz, you can just talk about like what the journey's been like of being a successful woman real estate investor, because, you know, I think it's a different angle than, this is somewhat of a men's business.
Sure.
It's become that. It's somewhat of an old boys club in a lot of ways too.
Absolutely.
We have a friend that invests in Philadelphia, and she's a very successful construction manager. Does some work with us. You guys might have seen our videos with her as well. And she's had people say stuff like, "Well, once you get a chance to review this bid with your husband, you know, like." You know, like let me know what your husband thinks, or is your husband going to come over? Like stuff like that. I mean, kind of derogatory stuff. I mean, and demeaning, I think. But so that's the world. Unfortunately, the real estate investing world. It's contractors and everything like that too. So lots of people typing in September 22nd, SCP-22. Be sure to do that. You guys are going to get a link to register for the webinar that I'm teaching on Friday at noon on how to flip houses with other people's money. So check that out. So. Cool. Anybody want to talk investing? I did all the talking about investing with women. I did.
I know. Yeah. That's great.
I'm putting it on you.
Okay.
Yeah. Cool. Yeah. So tell us, Liz, what do you think the like 3 challenges that women have in real estate investing?
Wow, that's a big question. That's a loaded one. Well, I think, you know, when it comes to investing, you know,
Hillary's hopping in.
Oh, cool.
Well, Hillary's spoken down to, not taken seriously. She'd love to hear your perspective. So what do you think? Yeah,
I think it's when it comes to real estate, as well as there's real estate and then there's investing in real estate, right? But investing in real estate comes along as finances, contractors, which tend to be a little more male dominated. It is what it is. So, you know, I think what's really important in a lot of ways is to you know, kind of stand your ground, know your stuff. And women sometimes have to work a little harder and work that much harder to be taken that much more seriously. It doesn't happen all the time, but I've heard from a lot of, you know, women in my, you know, circles that does happen. But if you stand your ground, you know your stuff, you'll be respected in your area and be taken seriously. But yeah, I mean, I've talked to contractors and you know, they look at me as, you know, just the wife of my husband. And I am the wife of my husband, but I also have my own...
But you're more than that, too.
I'm more than that. And there are things that my husband knows more than I do, which could be sometimes stereotypical. When it comes to contractors and construction and those sort of topics, I do know less than him. It doesn't mean that I can never learn as much as him or learn more than him. It's just not the area of our business that I focus on. So, you know, it doesn't mean, though, that... And when it comes to the finances... I like looking at all those things and running numbers and those sort of things. So I think the key is to stand your ground, know your stuff, and get involved, because you know the key is, you know, how do we keep becoming more financially independent as a couple? But, you know, God forbid something happens to the two of us for various reasons. No, nothing that's coming down the pipe. But you have to be able to stand on your own ground. Yeah. You know, and be able to
what strengths do you think women bring to real estate that men maybe don't bring? Because I think that's something that people don't think about very often, is strengths that women actually bring to the table in real estate investing. Like stuff you pointed out here.
Super stereotypical, but, you know, I hate to be into stereotypes.
Go for it.
You know, I think the attention to detail is one thing. And you know, I remember just walking through this building as we're getting ready for Facebook Live, and my husband had to say to me, on the way to walking to this building, he had to say to me, Liz, there are going to be things done that, you know, that aren't done that you thought they were going to be done. So please don't give me all this, you know, all this feedback before we go to Facebook Live. And as I'm walking through the property, even now,
I just went under the bus again. You guys see that?
But even so, when we were walking through, I'm like, oh my gosh, how is this not done? But I have to be respectful of, you know, my business partner, and he is my husband. So we've had to really work on that. What was the question again? I completely forgot.
I love that about you. Attention to detail.
Attention to detail, yes. Right. So I think that's one big thing. I mean, I will often, and also it's about really putting good teams together. I mean, I don't know if that's a stereotype either, but it's a strength of mine. And I'll say, and I have my husband's back. I know
I think
he's
that
good
you
at
get the people side of this business as well. I think that just maybe it's you or women or whatever. You get the people side of real estate investing.
Yeah.
That like the relationship side of it with regards to dealing with people and really understanding where people are coming from, contractors. I tend to jump into business partnerships way too soon. You're the one that kind of thinks about it and wants to.
You're more of a risk taker. I'm more cautious. That might be a little, again, stereotypical. I know a lot of women who are big risk takers and men are more cautious. But in our relationship, I'm more of a cautious person. And I also, I don't know if this is a womanly skill, but like the finesse of things. My husband took me through a flip that we were doing. And again, I was there to help in other ways, something else I was doing. And I looked around the property and I was just looking at all the things that, as a homeowner, I wouldn't want to see. So I really, again, I don't know if it's a womanly skill or womanly finesse or touch, but I'll tend to look at things more from is this going to be acceptable to a tenant? Not so much as the door on, but I just went to the closet to put my purse in one of the closets and the closet didn't even shut. I said, no, what's the deal? He's like, oh, no big deal. We're going to just shave off the top. It'll be fine. No problem.
It really wasn't that big of a deal.
But it is a big deal. If I'm trying to rent an apartment and my door doesn't shut, it's going to be a problem. So, the detail orientation is probably the biggest thing.
What? Okay.
Yeah.
Cool. I'll put it back on you because you're getting more questions. Okay. Travis Thomas wants to know, what is the biggest challenge you've had faced as a husband and wife team?
Separating business and personal.
Yes.
Bottom line. And I've had to learn this lesson. I mean, we've been investing together and working together for 12 years. As full-time partners, as part-time, as strategic partners, I mean, all kinds of ways that I've worked in this business. And my role with him right now is that I am more on a part-time kind of strategic kind of relationship in our role in our business. My husband's more the day-to-day operator, if that makes sense. We both worked in the business many years ago, like every day. Like I went to the office with him, and that was disastrous. So, but I think the biggest challenge is separating your roles as business partners and as husband and wife.
So Jessica Dold wants to know any pointers on how to make sure feelings aren't getting hurt when you guys don't agree on something, or how to make the ultimate decision.
Is that Jessica?
Jessica Dold.
Jessica, that's a phenomenal question. All these questions are great because we experience them every day. I think the biggest thing is that when be able to speak what you need and to be able to respect where the person is coming from. For example, I like to talk, I'm not in the day-to-day as much. I don't come to the office as much with my husband. So when he gets home, I'm like, good, we got 6 hours when you get home to talk about the business. I'll talk about it morning, noon, and night because it's just something I enjoy talking about. My husband comes home, right? He's been in the throes of the business. All he wants to do is come home to what? His wife, his son, his baby, and just relax. Yep. And I'm like, how's 334? How's this? How's that? And I'm like, so I'm meeting my own needs, but I'm not meeting his needs. This has gone on for many years. It was only up until, 3 months ago?
Yeah.
Him and I went on went to a wedding. We're on a date with each other, and we asked a really vulnerable question. And that's the other thing, is you got to get real and vulnerable with your partner, and you got to be able to take their advice and their feedback and do it. Because if you don't, you're not going to keep your relationship. Your relationship's number one. Your business partnership is number two. And if it meant that we don't work together at all to keep our marriage healthy, then we would do that.
Cool. No, that's awesome. So, listen, guys, this is just great.
Sorry, I'm going off on a whole thing.
I know. This is good. We're going to change the name of this thing.
Stop.
This is good. I might just leave the camera here with Liz. And this is awesome. So I want to just let you guys know that this is relationship gold that Liz is bringing here. So you owe it to if you're married, dating someone, whatever it is that you want to be in the real estate investing business with, take a minute right now and tag them in this video, share them with it. Share it on your profile, whatever it is. You can tag them in the video. You can say their name here, whatever it is you want to do to bring them into this conversation so they can watch this. And you can use just some stuff that we've been married for 12 years, investing full-time for 12 years as well. There's a lot of great stuff that Liz just said and good questions you guys can throw out too about investing with your spouse. There's been a few questions that people throw out here about financing and stuff like that too. So how much capital did you guys have to set aside for your first deal? So my first deal, and Liz was involved in it. It was my home. When her and I were dating, I bought a single family home, and her and I were dating. I've rented it out for free. 2 of my buddies. So it was like a house hack, right? So I put up, I think, $15,000 for that, and that was a great deal because I put up money to buy the home. My mortgage was costing me $940 a month. My 2 friends were paying me $500 a piece, so I was making $60 a month living there for free, and I had a full-time day job making a good salary, right? So I was able to pay off my credit cards, student loans, everything was great. Our first deal together was a duplex in Philadelphia that we did, and that was our first investment property was a private money deal, and we're big time. We love doing private money stuff because it creates win-win situations.
We weren't married.
Weren't married. I know, we were dating. I don't recommend this to everyone. You know, the views and opinions expressed by Matt Faircloth are necessarily, you know, right? So I don't do this. I could make a list of things that we did that you guys shouldn't do. A long list of things that we did that you guys shouldn't do, but it's okay. It worked out. So one of those things was to go borrowing money from your girlfriend's father to go buy real estate. So
it was a $30,000 loan though. We took.
Yeah.
We worked, I don't think we put anything in writing, which was again like.
Somebody just said you're the Real Housewife of Trenton.
Oh, I love it.
Yeah. You're getting lots of thumbs up and hearts for that. That's hysterical. Thank you, everybody. I hope that, put a hashtag on that. Let's see that sticks.
Oh, that's so funny.
There's Andressa.
Hey, Andressa.
That's our girl.
So, that's the...
Mm-hmm. Yeah, $30,000 loan from her dad, and it was a private lender that we put together. We bought a duplex with that money, and that's been a great deal. So I'm gonna check this out. Tag your partner, guys. Tag your partner in this video. BiggerPockets. Zachary, I have to untag that. I'm sorry because I can't read questions when that's tagged there. I love you though. Love you, Zachary. Okay, if you guys want to get a Facebook message to a webinar I'm teaching on Friday at noon Eastern time, you guys need to type in the code SCP22. I'm going to be teaching it there. I don't know, they might need you to be there too on this webinar. You're getting so many fans here that I'll be teaching a webinar. Maybe we'll get Liz to do them in the future. But September 22nd is what you want to type in to get to a webinar I'm teaching, which is how to flip houses with other people's money. How to flip houses with other people's money. That's what you guys want to type in, and it'll give you that. It'll give you access to that webinar. And we do a lot of stuff with other people's money.
It's interesting with other people's money when it comes to this, because this property here is, we've put some of our own money in.
Yes.
We've also, the majority has been a private loan.
Yes.
So what's the big difference, if I mind? Because I think this is a great question that I'll often talk to people about, especially people that are putting money together. What's the big difference of raising money, putting private money into a flip or a rental?
Yeah.
This is going to be a project. This is going to be we're considering selling or renting or however.
Yeah.
But
well, we'll probably do like a turnkey thing on this. We'll probably lease this out and then sell it as an investment vehicle because we've been in this place for a while. And it's just time to exit from it. We've been into this property for a long time, and it'd be a good exit. So what's the difference? So I would say that you have to have your exit strategy lined up if it is a rental deal, right? So I wouldn't want to do private money on a property that's a rental long term, right?
Because that's the biggest danger is what?
Yeah, interest accruing up, and time. I talk about that in the webinar, guys. Time is the silent deal killer. The longer you hold a property with private money, the less money you're going to make. Right. You know, it's what it is. It's true for a flip. It's true for a rental deal. Whatever it is, for a Burr property or anything like that. Andressa's going to the webinar September 22nd. See you there, Andressa. What's up? Time is the deal killer. And I think that for a rental deal, knowing what your clear exit strategy is, how you're going to get out of the private money, because private money can, it's more expensive than bank financing. Let's not kid ourselves. It's not as expensive as hard money, but it is expensive, and the rates can be anywhere between 8 and 10%, where a bank can loan you money for 4 to 5% right now. So I think that you guys need to just be aware that the longer you hold private money, the more it's going to cost you on flip, rental, whatever it is. So know your exit strategy. Do you guys do most of your work yourself? Because my wife takes advantage and I do all the work myself, do the work to keep the cost down. That's cool, Juan. Just the only thing is, Juan, is there's a time factor in there. So if you're doing if you're talking about literally like painting and doing all that stuff yourself, we rarely do that kind of stuff ourselves. Because I'm not the best at that kind of stuff.
Honestly, something that I've done recently is I like to, I know it sounds really weird, I like to clean.
It's pretty weird.
It is weird. Yeah. But a flip we had, Matt hired...
Likes is an understatement. Yeah.
No, well,
it's like her meditation.
Matt
she just loses herself
hired a cleaning company, and I thought they did a horrible job. And instead of spending another couple $100 to go hire another company,
I'll just do it myself.
I just want to do it myself because I know I would get it done right. And so cleaning out a pet peeve.
It was the best cleaning job I'd ever seen in my entire life. In your compliment. So yeah, but sometimes you do have to do things yourself.
But I think there's pros and cons to that strategy.
I do too. So one, that the upside is that, like Les said, there's certain benefits to doing it yourself. You're not the quality is probably going to be to your standard because you're doing it yourself, right? The downside is time, and that's the one thing that's going to be hard to duplicate yourself if you're doing everything yourself, and it may limit how much of the project you're able to take on, like how long it'll take.
But I will also give you this example too of this very project. One of Matt knew, and this is probably another strength that we kind of play off each other, is knowing what you're good at. Yep. And one of Matt's strengths is enrolling people.
One of the strengths.
One strength he has.
A few.
He has one strength. No, is really the vision of the project.
Yeah.
When you go into a property that you're renovating and you're investing in real estate, there's somebody who has the vision, right? They put the money together, they put the vision together, and then it comes down to managing the project. Managing and the vision are two very different skill sets, and they're very different kind of strengths. And you and I know that the vision and the front end of the project is your strength.
Yep.
And managing things is not as much a strength of yours.
Yep.
And so this project has taken longer, a lot longer than we've wanted to, because Matt is
for a lot of reasons. Yeah, but that's not what I'm great at. I'm doing what I'm not great at. And I think that you need to question that in your partnership is what are people's greatnesses, right?
Right.
So this is like a couples analysis of what are my great skill sets. And as a spouse, she should know that. I mean, if she knows me, she should know what I'm great at. And I should be able to say the same for her. And if you need more input on that, then go to people that know you really well. Go to your family members, go to your close friends, whatever it is. And don't be afraid to ask them, what am I great at?
And what are your weaknesses? What are you really
if you really want to get real with it,
you have to get real.
And don't get personal, and don't take it personally if somebody says, yeah, man, listen, you're not the best detail person. You don't have to get mad about it. That's just the way they're seeing you, And so what that means is that in your business, you've got to focus on doing what you're great at. And then the things that you're not great at, either if your spouse is great at them, then fine, get them to do it. Or if neither of you are great at something, you need to outsource it. You either need to bring in a third partner, or you need to bring in someone else that can do those types of things for you. Liz and I are both not the best at like detailed number stuff, like number crunching. And so very earlier in the game, we hired a bookkeeper, and she's now our office manager. And it made a world of difference to have someone who just sat and crunched the numbers on a daily basis for our projects. It really put things in a different light.
And one other quick thing is the long game. We both are committed to the long game of this process versus the short results. I think that's also important.
Cool. So what I want you guys to do, remember everybody's you guys just joining, the folks that are typing in SCP22, they're not just writing the date 2 days from now. What they're doing is they're typing in a special code that's getting them a Facebook message that's going to get sent to them to register for a webinar, a free webinar I'm teaching, cost $0. I'm teaching it on Friday at noon Eastern Standard Time on how to flip houses with other people's money. You will get a Facebook message from BiggerPockets, and then you just can follow the instructions on the Facebook message. So I forgot to ask you guys to share this video again. So those of you guys who are watching, take a minute and share this video on your profile, share it with the spouse in your life, or just share it in general. Just click share, put it out there, because it helps propagate BiggerPockets, which is an awesome resource. And the way that we get to keep doing what we're doing and BiggerPockets gets to keep doing what they're doing is by more and more people becoming aware of BP. And you can either go to one of those run to the back of the room guru sessions and pay them $10,000, $15,000, $20,000 to have them whisper the secret of real estate in your ear, or you can go to BiggerPockets.com and figure out there is no secret of real estate. There's not. There's just education and hard work.
Yeah.
It's just
and course correcting.
Right. Learning, working, and course correcting. That's it.
Repeat.
Yeah. And
repeat.
Listen, you want to send me a check for $15,000 to whisper the secret of real estate in your ear, you're more than welcome to do that. But don't do that. And don't do any of these run to the back of the room guru programs. Just check out BiggerPockets.com and help BiggerPockets propagate its message by sharing this video or doing more stuff on BP. So I see. Oh, by the way, Angela, that might not work what you just did. You might have to just write SCP-22 by itself.
Thanks for saying thanks.
You're welcome. Yeah, that's right. It's good manners. to say please and thank you as well. But consider just writing SCP-22 again. So cool. We're gonna have a lot of people on this webinar. This is awesome. You guys are really interacting with that. I love it. So if you guys are loving what we're putting out there, give us a big thumbs up. I want to see some thumbs up come across.
Upstairs?
Yeah, let's go back upstairs.
Okay.
Show you guys a tour.
Okay.
We can talk numbers for this project too.
Yeah.
So Big P is awesome, Kevin. So we'll talk numbers. We bought this property for $65,000. It was a shell. It was destroyed. It was unsafe to walk where I'm walking now. There's like pigeons flying around in here. It was missing a roof. It was missing all kinds of different things. So we gutted it and put it completely back together. We've invested, it's in the neighborhood of $350,000 in construction costs into this place. And we also had to course correct a few times. We had a partnership that went bad in the middle of this project. Not the greatest thing that happened in the world. I hope that doesn't happen to any of you guys. But that caused us to have to bring a few different contractors through here. So we invested $350,000 in real cost in the property to renovate it. But we also put more money on top of that to renovate the property that probably didn't need to get spent because it was changing gears with contractors, undoing stuff around the partnership and everything like that. So we're into the property for probably a little over $500,000. It's worth around $650,000, but we could have been at a way better equity spread. Still worth $650,000, but into it for say like $350,000, $375,000. Had everything gone perfect. But you know what? Things don't always go perfect in this business. That's another thing. Sometimes they do, but sometimes they don't. So you have to be aware of that.
Yeah.
So we are. Let's see. We're going to lease it out. The top line rents on this property, there's a storefront downstairs, and there's 3 apartments, okay? The apartments in the storefront all in are gonna lease for around $7,500 a month, okay? Taxes are fairly affordable here compared to the rest of New Jersey. On this property, they're about $6,500 a year on this building, and we're appealing them too. I'm trying to stick them at that as well by appealing them. But let's see. Cash flow at a value of $650,000 with a 75% mortgage on it will be around $22,000 a year with management and everything like that in there. So we could keep it, but we think that we'd actually like to sell it to get our private lender paid back completely and just to get everything unwound. And we own it in this partnership that we're looking to exit from as well. So that's the long and short of this property. Of that construction was framing and plumbing and central air and those cool exposed ducts you saw downstairs and all those kitchen upgrades and these flooring units that we did here, new windows, new, the rooftop deck that's out here, all that construction cost and a storefront upgrade and everything like that. This is a major construction project, probably to the tune of around $60 a square foot for you guys that are pricing things out per square foot. So it's a full gut renovation. Great project. Would I do it again? I don't know. And under different terms, yes. But not exactly the way that it went down. Definitely not. So you guys are awesome. A lot of people registering for the webinar. So if you guys got any more questions, we could talk more investing with your spouse. We could talk all kinds of other cool stuff you guys want to get yourselves into about finding deals. Talk about multifamily. Yeah. We're buying an apartment building in North Carolina right now. We could talk about that.
Well, I think you're bringing up a good point. This project, we're gonna make it. It's gonna be a win for us. However, there's been a lot of conversations and a lot of stressful conversations we've had about this very property. So that's the other thing is that none of your property and people that are investing now know this. Especially with your spouse, you're putting your own money at risk. Mm-hmm. You're putting your time at risk. You're putting other people's money at risk. That's a big deal. Mm-hmm. So it's great that you're teaching people how to invest with other people's money as long as you're doing it, in a fair way, of course. Yep. But it can be scary. It can be scary. And I think that's the other thing that him and I are always going back to is how do we, do this and do it so we're on the same page, we learn from it, and we course correct. Because in 12 years of doing this, if we haven't course corrected, then we shouldn't be doing this anymore. Yeah. Do you know what I mean? And I think that's really important. Not every project's going to be sunshine and roses.
You got to constantly be learning. Always looking at yourself in the mirror in this business and finding out ways that you can learn.
how do we do more of that that's working, and how do you do less of the things that are working? So.
Evan. Remember Evan?
Hey, Evan.
Hi. What's up, buddy? How are you, man? Cool. Jessica Gibson had a question. What type of bomb-proof interior materials do you prefer for high-end rentals? That's a great question, Jessica. So I'll show you a few things. First of all, the tile that Liz showed you guys downstairs in the kitchen that's a good, actually, bomb-proof material to use. It's ceramic tile. These floors right here are laminate vinyl tile. The apartment building we're doing in North Carolina, we're going to put, and it's 198 units, we're going to put laminate vinyl tile in every apartment in the complex, because laminate vinyl tile is waterproof. It kind of snaps together. You can take it up real easy. You can put it down real easy. So it's a great flooring product. Those are two bulletproof things to use. Also semi-gloss paint, because you can wipe semi-gloss paint. If they stain it, you can just wipe it. You don't have to repaint the whole wall. Nathan Green, what is the moment you both were really on? What was the moment that you're both really on board with real estate? I mean, it was early in the game. I mean, Liz and I started talking. We wanted out of life, and just about like avoiding trading hours for dollars. Liz and I realized very early in our dating time the value of time, and how we wanted to live an alternative life that allowed us to really own our calendar.
I think I read Rich Dad Poor Dad first.
Yeah, she read
and
Rich
then I
Dad
let you
first.
borrow it.
Yeah. Oh, yeah, absolutely. She made me play his cash flow game early in the game and everything like that. And I was convinced on real estate pretty quickly after reading that book and playing the cash flow board game a few times. I drank the Kool-Aid immediately for real estate. So, what project did you take your biggest loss on financially, emotionally? This one hurts pretty bad. This one that we're in right now. I'd say our first flip was the one. Yeah. There was a flip. I wrote a few articles on it on BiggerPockets about the first flip that we did in the town that we live in, and we course corrected about halfway through and lost a ton of money. And there was a window where we could have made a few dollars, but we decided to stay in it and finish the house. And there's a guy that came along that wanted to buy it from us early in the game that could have just bought it. Maybe we would have made $10,000-$15,000. And no, we're gonna flip it ourselves. And so we started to renovate the property, and we got about a quarter of the way through the renovation, and we realized the house had to get torn down. So we ended up ripping this house down that we put a new roof on. I had reframed a lot of the inside of it and everything like that, and we found out that there was major termite damage, and a lot of the house was built on an old foundation that was now dirt. So it was a really, really bad property. So we ended up tearing the whole thing down and building a new house. We got out of it. I mean, it was fine. We just lost money and got over our head way too fast. So cool. Thanks for bringing that up, Jim. No. Cool. Hi, Matt. Do you need a silent partner? Sure. I love silent partners because they don't talk too much, and I wish I had a silent partner.
I'm not silent. And I'll never be silent.
Yeah, you're talking about a silent money partner, Bradley. I listen. We're always open to that and everything like that. So if that's something you're offering up, send us a Facebook message or a message on BiggerPockets at Matt Faircloth. So Lisa,
hey, Lisa,
what's up, Lisa? Whoa, that's what realtor that we work with. So closing my first rental in this area in October. Evan, are you really you're gonna start dropping anchor in DC, huh? Is that what's gonna happen? Cool. Well, good luck down there. We miss you. Cool. And congrats on your first rental on October 27th. How long did it take you to build a business to the point where you could replace both salaries? Longer than it should have. Probably 7 years, 8 years, right?
Yeah.
About 8 years. I think that we also remember we started our business in 2008. The bottom fell out of the real estate market in 2007, 2008, and it took us a couple of years to course correct from that because we'd built a juggernaut of properties that we had to unwind with the real estate market shifting and everything. So I think that had we done it, I think that it can truly be done with the right money partners and the right strategy and the right goals in 5 years or less.
Probably.
Yeah, that you could replace your family's salary. So it also pays to live below your means in the beginning. When you first buy your first house, you don't need to be buying the $750,000 house on 3 acres to get going, because that's just going to take it longer.
Well, the key is don't spend what you make, right? Just try to make more than you're spending. But it's another.
So,
Did you start with your own money?
Katrina, did you start with your own money or others? I started with my own money when we first got started. We've been putting our own money into the business. We still do a lot of private money because it allows us to expand and do more and more deals.
We started with closest family, our money, closest family, and then expanded out from there. And it really wasn't until you started raising private money from non-family members that our business really accelerated.
Well, this is a question for you. I'm not going to answer this one. What other books do you recommend? Juan read Rich Dad Poor Dad 10 times. I'll just say one. I'm reading The Science of Getting Rich right now. It's an awesome book. So go ahead, Liz.
Well, you can basically, you want to read books that are real estate oriented, but then also just kind of personal growth books. And that's important. So
you got to work on yourself too.
From obviously the BiggerPockets books are great. All the stuff from, what's a recent real estate book I've read? I haven't read a book recently, actually. Think and Grow Rich is one of my favorites.
Absolutely.
And As a Man Thinketh. Anything about my mind, I tend to read.
I got a perfect time for a plug. If you guys want to join my webinar that I'm teaching for free on Friday at noon, I have a list I can give you guys on the top 20 best real estate books to read. I do giveaways on my webinar.
There you go.
You know that?
No.
I get one of the giveaways I give on the webinar is a list of top 20 real estate books and a brief review of each of them. So all you got to do is type in the comment bar right here, September 22, not the whole word, SEP22. And that one, and Facebook will send you guys a private message that you can follow the instructions on, and you'll be able to register for the webinar I'm teaching this Friday at noon. You can also go to biggerpockets.com/webinars, and you can that'll sign you up for.
I will mention, Juan, if you're getting into property management, which was a big place that we were in terms of me helping Matt, when we first got started around building our property management company, getting a book that comes along with forms and templates is really important. Don Beck is his name. He wrote a book on landlording, and
look that up, Don Beck.
And it was one of the most helpful programs and practical for us because we took a lot of his templates, and there are templates today for if you're if you're managing your own units, that is.
Yeah.
If you're not, then it wouldn't be helpful. But.
Cool. Gerald. Go Eagles. Sorry, Gerald. We're not Eagles fans. I don't really watch pro football, but I love Philly. I love Philly as a place to go visit, a place to be. We do a lot of business in Philly too. So love Philadelphia.
What's the name of the flooring?
What's the name of the flooring? Thank you. Click off of that. It's called laminate vinyl tile. Some people, like your flooring guy's going to call it.
Show it again.
Sure. Your flooring guy's. I wish I had a sample. Your flooring guy's going to call it LVT, but it's called laminate vinyl tile. It's about 7 millimeters thick. And it's a polymer plastic product. Looks just like floor. You can take a key to the stuff and scratch it, and it won't scratch. And it feels nice and cushy, like hardwood. We have like a 1 mil padding underneath this too. But it's very affordable. I think we paid $1.55 a square foot for this stuff. Pretty affordable. That's on top. That's installation on top of that. So laminate vinyl tile is what it's called. Kevon,
awesome.
Hey from Houston, Texas, just finished our first flip and having a contract. Hope everything's going well with you down in Houston, Kevon. We've been thinking a lot about you guys.
Yeah.
And I hope you guys are putting yourselves back together and thinking of you.
The other recommendation, just another tip, is when you finish a project, whether it's your first one or your 100th one, my biggest suggestion, something that him and I will do a lot, is we'll regroup from it. And say what worked, what didn't work, and what are we going to change moving forward. It's just kind of part of our process, and it's just like continuous improvement.
Start and stop.
Yeah, it's actually an exercise. What can we continue doing? What can we start doing? And what should we stop doing? Because whether it's your fifth, or your first, or your 100th, or your 1000th, you're going to learn something.
Yeah.
You're never going to be in this business and go, I know nothing. I don't need to know anything. I'm not learning, and I'm good, and I'm just going to sit on my beach chair and drink cocktails.
It's called continue, start, and stop is the exercise. I'm at 15%. You
sure.
See that? Cool.
Yeah.
Yeah. What time we got? Okay. So how many multifamily you got? Delegating was it? How many multifamily properties you guys own? I actually don't know. It's hard to say property wise. We own a lot of single family homes. We own an office building. I can tell you how many doors we have. We have 160 doors, and we're about to buy a 198 unit apartment complex. So we're going to double our portfolio by the end of the year. Awesome. I'm pretty excited about that. But I don't know how that breaks down in multifamily and single family. We've got a good spot in single family. It's mostly multifamily.
You have like
maybe like, I don't know, 8 or 9 single family homes through the funds too.
Oh, okay, gotcha.
Single family homes and stuff like that. So, can you briefly explain scaling in 5 years to replace salary? Is this just cash flowing flips?
It's you can take that, but
that'd be a good webinar. I have to work on that. But like a webinar on how to quit your job in 5 years to real estate.
Because we do. I mean, quite honestly, we have rental income coming in, and then we also make money through flipping properties.
Yeah.
So it's a multi-pronged approach, and you kind of having that common language with your spouse is that we're making earned income, or we're making passive income, and depending on where you are in your own growth, you might have a mix of those.
Yeah.
And we have a goal, him and I, that we're like, okay, in a certain amount of years, we don't want to be doing as much active activities.
Absolutely. So briefly, Arnab, you got to do, I find a hybrid of flips and rentals and raising private money. And that's the strategy. You got to do flips or something that generates chunks of cash, whether that's wholesaling or fix and flips. Do those things. Take the money you make from those, put it into rentals, because rentals are your long-term cash flow that's eventually going to replace your income, right? Because you got to get chunks of cash to put into deals. Once you've built up a track record, then you can take that track record forward and start raising money from people to do deals with you, and you can pull off a swath of that money every time you do a deal with somebody. So 10 times rule. So, I get it. Juan, you're in the 10 times rule. Grant Cardone's awesome. September 22. Got time for a few more questions. And by the way, my battery's dying, so I'm gonna have to jump soon because my phone battery's dying. What is your strategy? Oh, cool. I think we covered that. My financing partner has about 25 properties and interesting in other markets. So we'd be interested in talking about private money deal. We don't lend money to other people's deals. I mean, we do a lot of work with other people doing private money with us. People that are looking for hands-off passive income. We're not a money lender or a supplier of private money at this point. So you're more than welcome to reach out to us. But just to be clear, we're not a lender. We're an operator that can put money to work for people. So you're welcome, Arnab. Great questions.
What's it called?
Down to Earth Landlord.
Down to Earth Landlord.
It's got a picture of a hot air balloon on the cover.
That's what the Don Beck book was. Down.
How did I remember that?
Wow.
I got a black. That was like 15 years ago we read that book when we were first dating. Is that exactly a broker a deal and lend to you guys? Okay, cool. Now we can talk. All right, cool. Arnab, send me a message on BiggerPockets or on Facebook. Be happy to talk to you further. Cool. Listen, guys, I gotta just plug the webinar one more time. I should probably jump because I bet you my battery's gonna die soon, and I want to be able to end this thing properly instead of just my phone dying. Type in the code at SCP22 if you want to register for my webinar that I'm teaching, which is on how to flip houses with other people's money this Friday at noon. I'm going to be teaching that, and it's a free webinar, full free. You guys can join me Friday at noon Eastern Standard Time. Would love to have you guys join me. So type in that code, and I will see you guys there. Cool. Don't forget to tag. This video will still be out, so tag your spouses, tag your partners in this video. And for those of you folks, I think we've laid out what I think could be some good stuff for you guys on investing with your spouse, investing with your life partner. What do you think?
Yeah, and I say, in action, because I like to, I like to watch things, but then I like to get something from it, because I'm like, I don't want to be inspired. I want to do something. As a result, I want to do something. But, talk to your partner or your spouse and talk about where do you guys want to be in 5 years.
Yeah.
What do you see for yourself? Who do you want to be in 5 years? And I think as you unravel that and talk about kind of your dreams and where you want to be, the details kind of then lead itself up, and that's what inspires us together. And then we go to day to day, what do we have to do? But
cool.
You gotta have that vision to inspire you. So.
Liz gets the last word. Cool. Awesome. Thank you guys for watching.
Thank you. Bye, everyone.